I used to think a savings account was the best place to keep extra cash. It felt safe, familiar, something you could set and forget. But after a while, I noticed the balance really wasn't going anywhere. Factor in inflation, and it was actually worth less than when I started. That's what made me step back and look for better options. I wasn't looking to gamble with investments, and I didn't want to lock my money up for years. I just needed somewhere to hold it where it wouldn't lose value. That's when I found money market funds. And at first, they seemed pretty similar to a savings account, but once I started using them and made a few mistakes along the way, well, they don't work the same at all. And it takes a bit more to understand. Once you get the hang of how they function, you'll see they're a real step up. Still flexible, still accessible, just earning more than what you get at a bank. Now, I didn't know much about them at first, just that they weren't quite a savings account and they weren't really an investment either. And that's kind of what makes them interesting. Money market funds are designed as a place to hold cash without tying it up or exposing it to too much risk. Now, behind the scenes, they pool your money with other investors and use it to buy short-term, low-risk debt. Think like government securities or loans to large companies. So instead of just sitting there, your cash is actually earning interest from those underlying assets. Now, the returns aren't fixed and they will shift a bit with the market, but they'll almost always beat what you get from a regular savings account, especially over the past few years. And because the assets are short-term and liquid, you're not locked in. You can move money in and out pretty easily, which makes it useful for goals that are still a little ways off, but not far enough to invest in something long-term. Now, obviously, I wanted to know, how safe are these really? And the answer is generally vary, just not in the same way as a savings account. They're not FDIC insured, so there's no government guarantee behind your balance, but what they do have is a strong record and a more conservative setup that makes big losses pretty rare. Still, that doesn't mean you should treat them exactly like cash in the bank. The safety depends entirely on what the fund holds. Some stick strictly to government-backed debt, which is about as secure as it gets. Others mix in short-term loans to corporations. Still low risk, but it's not zero, so it's worth checking the details before you move your money over. And this is where I made my first mistake. I figured all funds are probably more or less the same. Didn't bother to look at the holdings or assume the rate would stay steady, but money market funds adjust with the market. So some months you'll earn more, other months you'll earn less. That's completely normal. The other thing I didn't realize, timing matters. Most funds pay interest monthly, and if you pull your money out right before that payout hits, you can actually miss a chunk of what you earned. So a little patience here goes a long way. So money market funds aren't meant for long-term growth. They're more for short to mid-term goals, like setting aside cash for taxes or saving up for something later this year. Situations where you don't want to risk it, but you'd still like to earn a bit more than what your bank is offering. And if you'd rather be extra safe, funds that stick with government-backed debt are usually the way to go. The rates might be a little lower, but they're about as steady as it gets. Really, it just comes down to knowing what is the money for. Once that part is clear, figuring out if a money market fund fits is a lot easier. And if you're thinking about using one, just take a minute, check what the fund actually holds. Make sure it lines up with what you're comfortable with. And if this all still feels like a lot, like if you're thinking, I get it, but I'm not sure I want to manage this myself, then you probably don't have to. Heck, that's where I was at. It's a lot of time and energy to mess with a bunch of different banks and compare rates. I didn't want to mess anything up. That's what led me to Raisin, because Raisin, it's not a bank. It's more of a hub that connects you with banks and credit unions, offering high-yield savings accounts, CDs, and no-penalty CDs. You can browse offers, compare rates, handle everything from a single dashboard. The sign-up only took a couple of minutes, and once you're in, you just pick the offer you want, link your existing bank account, and transfer the funds into whatever product you choose. Raisin will handle the rest behind the scenes. The money stays with the bank you choose, but you manage it through Raisin's platform. And when a deposit matures, the money just goes right back into your linked account. You don't have to remember dates or log in to request a withdrawal. It all happens automatically. One part I really didn't think about going in was the cash account. Now, it doesn't earn interest, but it's there if you want to move money between products without sending it back to your bank first. So if you're switching from one offer to another, or just waiting for a better rate to show up, you can store it there for a bit. It's not where you'd leave your long-term savings, but it adds some flexibility and it's easy to use. And that pretty much sums up my experience with Raisin overall. I'd looked at Max My Interest and Marcus by Goldman Sachs, and they both seemed nice, but either felt too rigid or didn't offer much variety. Raisin just made more sense. The interface is simple, everything is in one place, and moving money around is straightforward. The only downsides I ever noticed were that customer support wasn't the fastest in the world, and sometimes the absolute top rates weren't listed, but but for what I was looking for, the convenience more than made up for it. So overall, money market funds aren't some magic upgrade, but if you know what they're good at and what they're not, they can be a solid way to get more out of your savings. The returns are better than a bank, the money isn't locked up, and you're not taking on more risk than you're comfortable with. And for me, Raisin just made it easier to get set up and actually start earning more. I didn't have to think about anything, I could just pick what worked and let it run in the background. And if you're thinking of giving it a try, there's a link in the description. Most of the time, it'll take you to offers that you won't see on Raisin's main site. Also, if you're interested in working with us or sponsoring a future video, just reach out using the email in the description below. And if you got any questions, whether it's about money market funds, Raisin, anything we covered, feel free to leave a comment. I always try to answer as many as I can. Otherwise, thanks so much for watching, and I will see you in the next one.